All right, we're going to be going over a new thing here. I know we were talking about the commitment to trader report and correlating that with cost basis, but we're going to go over a specific trading strategy that I use when we have range-based markets, a trend into a range, right? So clearly, as of November, we have a strong bullish move higher here. With this strong bullish move higher, we started to consolidate a little bit. So if we draw a range, there's our range. That is not our range. That is our range. Just kind of like that, right? This is our range. We're rejecting, buying, selling, buying, right? Look for the range. When we're ranging after a bullish move, I look for two things. One, a break above the range, a breakout, retest, continue. That's one thing. I look for a break below and then a slingshot. This is the break below here and the break below. Then here's our slingshot. So when we break below, we want to rope it the sellers. We want to catch the sellers off sides. That's what we're looking for. We're looking to catch these sellers off sides because we have a strong bullish move, consolidation, and we want to catch these sellers off sides. So specifically what I look for when we have a bullish move higher into consolidation, I look for price to break below the range, and then I look for sellers to try a few times. Fail, get stopped out here, provide that stop run because they are off sides. Because those sellers are off sides. Here's the range. And here's our strong bullish move. This is what we're going to look for on this chart. So we're going to look for that strong bullish move, range, a break below, catching those sellers off sides, and then we're going to run their stop losses up to get that momentum higher, right? This is not, and I'll be transparent, this is not my specific trading strategy that I completely created, right? This is based off of somebody else's strategy. I just used it and tweaked it for my own trading. I use other things like the commitment to trader report to see if the sellers are actually offsides, if they're getting stopped out, and I use that to kind of correlate things on the daily chart. This can be done on any time frame. I like using it on tick charts in the daily, right? Tick charts during the day, intraday on the 500, 4,000, 8,000, 10,000, whatever I'm seeing with the setup, right? Whatever time frame or tick chart that the setup presents itself. But that's what we're looking for. So we need to get rid of this stuff, right? So let's draw this here. We're going to look for a strong bullish move. Then we're going to look for a trading range. And then we're going to look for break below the range, catching sellers off sides. And then we're looking for sellers to attempt to bring price down. Then we're looking for those sellers to fail and stop out. That's what we're looking for. So right here we have our strong bullish move. We have our strong bullish move all the way up. Right here we have our trading range. Here's our trading range. Here is our break below the range. And we will label these one. It's not letting me move further over. Let's move this further over. Add a few more days. All right. Here's 1, 2, 3, 4, and 5. There's our 5, right? So let's say this is, just so we can save some room here, 1. This is our 2. This is our 3. This is our 4. And then we'll make this pink to make it a little bit easier to see. And this is going to be 5. All right, let's zoom in a little bit. Bullish into a trading range, and we broke below the range. When it breaks below the range, one of the rules is don't chase it. Do not chase. So if this is an intraday move, don't chase. Look to see if we're going to get continuation. I use the 21 EMA, that's this blue line here. That's the only indicator I use. So if I say continuation, I'm looking for price to break below, retrace somewhere around the EMA, and then continue, because why? Now we're creating market structure on the way down. Okay, now maybe, you know, we retrace and then continue. Now I can trade to the short side. As long as we hold the bottom of the range, the underbelly of the range, and we don't break back into it, we can continue to the downside. That'll give me signals, yeah, we can go ahead and we can start potentially shorting this market. But on here, I use the EMA, and I want to see sellers try a few times off of the EMA. As you can see, price retraces to the EMA. We will thicken this up here. Make it a little bit easier to see. We have price retrace to the EMA. I'm sorry. We have price break below the range, retrace to the EMA here. From the EMA, we try once. Sellers try to bring price down once. We retrace again. Sellers try to bring price down twice. So now you have, okay, we have sellers that shorted below here to bring price down. Now you're having late sellers come in once and late sellers come in twice. That's what I like seeing, 2 times. Love seeing it twice. Doesn't always happen twice. Sometimes it happens once. Sometimes it happens 3 times, 4 times. But the more sellers that get roped in and caught offsides on the opposite side of the trading range, we look to have them get stopped out. Has to be bullish move into a trading range. Then break below. Try a few times. Sellers try a few times. Now, this pink line is going to represent the stop losses. Seller stop losses. So if I'm taking this trade intraday on a faster time frame, a faster tick chart, I'm going to enter one tick above or a couple ticks above this stop out area. So we're going to say this is, all right, let's see. This is 5. This is going to be entry, long, short, stop out, right? Entry long, short, stop out. Where do we put our stop loss? Well, clearly, if we're looking for structure, market structure, I keep my stop loss somewhere down here at the low. It can change based off of how far it is away. You can zoom in on a faster time frame and say, okay, yeah, I can see some sort of a market structure on a faster time frame, and you can place it based off of the market structure on that faster time frame. But just looking at this chart, stop loss here. Now, once price breaks above and back into the range, we need to see a few things. We need price to break back into this range. We stop out those late sellers. These are those late sellers. We stop them out, and then we get back into the range, and then we hold the bottom of the range. We're holding there. Sellers cannot bring price back down. So once we break this entry long, short stop out area, we want to kind of hold that, right? We don't want price to start closing below here. If price starts closing below here, if we start getting candles closing down in here, you really got to start thinking, all right, is this setup still valid? Am I too early? What's going on here? If we start seeing candles start closing in here, you got to start questioning. Look at those faster time frames, see if there's market structure that's still holding, see if your trade setup is still valid. But once we break into the range, two things. One, I look for the bottom of the range to hold and have buyers on the order book, and aggressive buyers. You can see it. It'll also correlate on a footprint chart showing the aggressive buying coming in, an imbalance of buyers at this level in comparison to sellers, more buyers than sellers. Profit targets. Remember, these moves aren't going to always slingshot, so you always want to take profits on the way up. Where are we going to take profits? Profits are going to occur at the midline profits, at the top of the range, top of range profits. You want to have, or what I like to do, I like to have the majority of my position taken off at the top of profits. Okay? Now from there you might say, okay, now we're back in the range, we took profits at the top of the range. I'm going to hold a runner, as you should. On these moves and on, moves where you think you're going to get continuation, you always want to at least have a little piece of the pie. You want to try to make as much as possible, right? But I like to have some profits taken at the midline and all, if not most of my profits at the top of the range. Now you might question, okay, now what are my other options for holding runners? Where am I going to take profit? Two things. One, I do what's called a range rotation. I draw a rectangle to the bottom here. You'll see this on my charts as purple. Make it purple. It's easiest for me to see. So what I'll do is I'll take that, copy it, and paste it. Because we want the range to rotate above. The move below rotates to the move above. Now this will be our range rotation. This is going to be more profit targets. midline profits, top of range profits, and this will also be profits. So if, let's say you're holding, right? You get in here, your stop loss is here, you bring, price goes all the way to the top of the range, you take most of your profits off, we retrace back down into it. Well, you're holding a runner, right? I like to move my stop loss. Now that we're back in the range and we're at the top of the range, I like to move my stop loss right to the bottom of the range. So now our new stop loss, or my new stop loss, will be right in this area. Right in this area. This will be my new stop loss. And that's when we reach the top of the range. Because once you get a range breakout, what do we always look for? What do breakouts always, not always, can't say always, most of the time what do ranges do? They retest. So we have a range breakout, retest. Look at this candle here. Wicks down all the way down and then comes all the way back up. I like to look for a range breakout to retest the top of the range, if not the midline. It's not perfect. Not everything's going to be perfect. But the way this candle formed, and stop loss, once we break into the range, break the midline, stay above the midline, and we reach the top of the range, I move my stop loss to the bottom of the range. And that's only for runners, because remember, I'm taking the majority of my profit off here. Next target is going to be the range rotation. Measure the move below the range, copy and paste it above the range. Gives us a range rotation. There you go, you got more profits here. Now let's say you need to figure out, okay, after that I still have runners. Since we held the pullback, breakout, pullback, held, and then we continue. Where's the next target? Well, let's look at this move. We have, this is the bullish move up into the trading range. This is the bullish move up into the trading range, right? We'll change this. We'll make this like a nice green color because we're bullish. We'll make this 4. There we go, nice and big. Well, we have a bullish move up. Copy, paste, put it at the bottom of the range. Now this would be our measured move. This would be our measured move. Now, did we reach the measured move? No, we didn't. We did not reach that measured move. That's okay. Why? Because we entered in long on the stop run of those sellers getting caught off sides, and we went long. Take some profits at the midline, most of the profits, if not all of them, at the top of the range. You look for the range breakout retest for the continuation, and then here's your runners. Get that range rotation. We got most of the range rotation. We got the range rotation filled, and we just missed shy of the range measured move. We missed by like 985 to, oh my God. Math's hard. I'm not even going to try to do that right now, but range measured move. So I'm going to leave this on my chart, and this is going to stay on my chart, which I have here. Let's see, where is my other daily chart? See, here's my daily. I have a larger measure move up here. And this is if I zoom out and that's staying there. But here's my daily, as you can see, same thing. Swing objective. Swing objective was here, and we reached it here. Now this I'll get into in a moment. And we'll get into that in a moment. So range measured move. This will stay on my chart, or I will go ahead, which I don't have on this other chart, I will add that to my chart. I will go ahead and add that to my chart. If we look that we're going to be breaking back, I'm going to say, okay, well, here we go. As long as we don't break structure, right? Structure is broken where? Structure breaks below my stop loss. Structure breaks on this specific setup. So if we start breaking below my stop loss here and getting continuation, I'm not looking for this range measured move anymore. It might be somewhere else. It might be a different higher time frame measured move. But for now, that's what we're looking for. This is going to be the range measured move. So if we hold here and we continue to bounce, I'm going to keep this here. I'm not saying it's going to be a target, right? That would have been the target if we stayed above the range and we continued. I'm just going to look at this as a, all right, let's see what happens here. I'm going to be hands off, right? I'm not going to be looking at this as it's going to be a full-fledged target. I'm going to look at it as, okay, I'm going to start to be hands off here. See what happens. Let's see what else. So now we're coming down, and we're coming down, right? So we can look for like a range measured move based off of this, but before we do that, we're back inside of the range. We came up high. What did we do? We came up, rotated below our purple here, rotated above. But now that we're rotating above, what do ranges like to do? They like to rotate again. So I go ahead and I draw another purple box right here. Then I copy that and I paste that. Let's see, and this is not going to be a full-fledged target. It's areas of interest now. This will be the rotation. Bullish into a trading range, trap in those late sellers, stop them out to fuel the move, take profits at the midline, take profits at the top of the range. If you're holding a runner, look for the breakout retest to hold for the continuation. Range rotation up here, copy the move below to the move above. That's going to be target for more profits, if not all your profits. It's up to you. You're going to have to determine how you want to do that. If you want to look for a bigger move, range measured move. We have our move up, pullback, measured move. Measured move did not hit. What did we do? We rotated back into the range. Well, what happened when we rotated back into the range? Right? We are right. Let's see if we can move this over more. I can't move it over more. We rotated back into the range and we failed to reach our rotation because we rotated back above the range. So this is no longer valid. I do have to update my charts because what are we working with now? Now we're working with this rotation here. See? We failed to make the full rotation. So now we're working with this rotation here. Bring this one up. And this is our rotation here. Now we completed our rotation. See how we're rotating around this range? Below, above. We tried to reach this full rotation down here, but we failed to break that full rotation. We break into the range and we go above the range. Now that we're doing that, what are we looking for? This distance to be copy and pasted above, and we completed our range rotation. It's a completed rotation. This here, right, if we look at this one here, this is a failed rotation. This move is a failed rotation. Why? Because we came back up into the range. When price came back down, we came back up into the range. Okay, so now this becomes our rotation. Completed. Now we're back into the range, right? That's how I trade ranges. This setup here is what we went over. Bullish into a trading range. Break below the range. Roping in those sellers, right? We're going to rope in those sellers. Catch the sellers off sides. We're going to look where their stop losses are. Sellers they attempt to bring price down, they fail and get stopped out. They attempted to bring price down, they failed and got stopped out. Profits at the midline. More profits, if not all of the profits at the top of the range. If you're holding a runner, look for the range breakout, retest to hold for the continuation. What rotates below the range likes to rotate above the range. This should be all, if not most. If you have, let's say, 2 runners and you take 1 runner off here, you can look for that range measured move. That measured, or the measured move. The break up, the pullback, and then the measured move. Measured move failed. We came back down. What did we do? We copied the range rotation from above the range to below the range. It failed. Failed to rotate all the way down. Because when we got here, we rotated back into the range. Broke above. Now that we're doing that, let's look for more targets. Copy the range rotation below put it above the range. Profits. Rotate back into the range. Now we're on sit on our hands. That's what I'm doing. Haven't traded since this morning. I'm sitting on my hands. I'm letting this play out. I'm going to wait for the market to show the next move. But for me, at the moment, this setup's pretty much done. This is what I've been trading off of for a while. I've been posting this for a while. Setup's pretty much done. I'm going to see if cost basis in this range still plays out some way, right? I'm going to see if we accumulate more positions. I'm going to look at the COT report. I'm going to go from there. But that's what I'm looking at. That's how I do these steps here. Strong bullish move, trading range, break below, slingshot up. My profit targets on the way up. The ultimate final target would be up here, which failed, and then we get those range rotations. Simple. That's how I do it. Right? This can be done on the daily. It can be done on the lower time frames, the tick charts, but me seeing this present itself on the daily, I knew the minute we broke above here, we came back in the range. Now I have some pretty strong targets and key areas that I'm going to be looking at. And as you can see, breakout, retested it there, continue. Range breakout, held, continue. Where did we take profits? Where did you see sellers or profit taking happen? We saw some profit taking happen when we broke into the range. We saw some profit taking at the midline. See this wick down here. We wicked down during that day. That was profit taking. Break above the range. What did we get? Profit taking. A little bit continuation, more profit taking. Buyers came up, continued it, profit taking. So that's what I look for with these moves. Now, I do want to go back just a little bit, right? This is the overall, I forgot to mention this. I apologize about that. This is the overall larger move. Now, let's go and look at, zoom in. I forgot to do this. I do apologize. Let's look at the range breakout measured move. So this is going to be the range breakout, right? We broke out of the range. Where did we retrace? We retraced back into the range here. I do believe this one hit, if not almost hit. So before we were looking at the overall higher time frame measured move, now we're looking at the range breakout measured move, right? So this is going to start the move. This is going to start the slingshot. And when we retrace back to the range and we hold the top or inside the range and then continue, this will be the measured move, which we broke, right? If you have profits, if you're holding more here, you know, you're grasping at straws. If I'm holding this position, 100% of my position and runners, it's going to be off at this level. I apologize I didn't put that in there before. I was looking at the overall move on the break below in the continuation, which we haven't reached. But right here, range measured move. We held. Or not we held, we broke it. And what did we do? We retraced back to it, tried for the more continuation, and then we failed there. That's beautiful. That's beautiful. Those are all the targets I look for. I hope I didn't confuse you guys by adding that in late, but that would have been the overall measured move target on that. And also, you want to look at a little bit more. You want to go into our retracements on this. Final thing. I hope I'm not adding too much into this, guys. I hope I'm not adding too much. I guess you can watch this a couple times if you need. We're looking at our retracements, right? We're looking at after we break below the range, stop out those sellers, and we start that move up. Here's a retracement. Copy that retracement. Here's a potential retracement. Didn't fully get it, but that would have been a potential retracement right there. So, you know, I would have looked somewhere, this would have been a great area to look for buying. But we didn't quite get it because we had our rotational swing that we broke below and then held and then continued, right? That's what I like to look for during our bullish into a trading range. This setup has to have these steps, has to follow these rules and these steps. It can't be any other way. Bullish into a trading range. Vice versa for bearish into a trading range. That's what I look for. That's about it. I will post this one if you guys want to go ahead and watch this one later. Trying to just waste some time on a Friday and not trade since we had a great week and don't want to go into the weekend with making any mistakes. So that's it. That's bullish into a trading range in the breakout. Good luck, guys.